There's no denying that Google has significantly impacted people's lives. When you have a question, you Google it. When businesses want to reach new customers, they turn to Google. Since its IPO nearly 2 decades ago, Google has established itself among the most successful technology companies, helping pave the way for profitable businesses worldwide. But does all this success translate into positive returns for investors? Keep watching as we look into what $1,000 invested in Google 10 years ago would be worth today. We'll also explore what has led to Google's growth and what might contribute to the stock movement over the next decade. From 2014 to 2020, Google stock exploded, appreciating more than 250%. Then the COVID pandemic hit. While most of the world came to a complete stop, Google's stock price nearly doubled over the next 18 months. Unfortunately, things haven't been as glamorous for investors since. In the past 2.5 years, it's been an up and down battle. A $1,000 investment in Google, now Alphabet Incorporated, a decade ago would have grown to $5,290 today, thanks to the company's dominance in search volumes and digital ad spending, including YouTube's substantial contribution to its revenues, said Daya Pernes, CFA and co-founder of Pernes Research. Pernes said that even though investors have realized a substantial gain over the past decade, there could be roadblocks soon. However, the rise of AI-driven platforms like ChatGPT presents a challenge to Google's traditional search model by offering conversational AI experiences that could divert user traffic away from Google, said Pernes. What's been affecting Google's stock? In its early days, Google was primarily known as the leading search engine online. Today, it still owns nearly a 92% market share of all internet searches, but has expanded to new business units like cloud computing, cybersecurity, wearables, smart home products, and more. Despite expanding into different verticals, Google's revenue is still primarily driven by online ads. In 2023, their ad sales represented 73% of their overall sales revenue. That heavy reliance is why Google disappointed Wall Street when they reported earnings last month. Revenue was up 13%, and their diluted earnings per share were up 56% in the fourth quarter of 2023. But ad revenue was only up 11%, coming in below analysts' expectations. Over the past couple of weeks, the tech giant has been under fire due to controversy surrounding its Gemini-powered AI chatbot. It disabled users from creating human AI images after the chatbot put people of color into Nazi uniforms. This is just the latest setback for Google, which has been trying to launch a sustainable competitor to ChatGPT for over a year. This controversy adds to Google's challenges as it aims to diversify its revenue streams and compete in new areas beyond online ads. Despite setbacks, Google's dominance in search and its vast resources make it a formidable player in the tech industry. Where could Google's stock price be headed? Even though Google has disappointed in its most recent earnings, investors shouldn't be too worried. They're still seeing double-digit revenue growth from ad sales, including a 16% increase in YouTube ad revenue last quarter. However, where investors should be the most optimistic for the future is cloud computing and the effects of generative AI on their overall revenue. This past quarter, the unit saw a 26% increase in revenue. Indeed, while Google's recent earnings report may have fallen short of expectations in some areas, there are still promising signs for investors. The continued double-digit growth in ad sales, particularly in areas like YouTube, demonstrates the resilience of Google's core business. Additionally, the growth in revenue from cloud computing and the potential impact of generative AI on overall revenue offer exciting prospects for the future. With these developments, investors have reasons to remain optimistic about Google's long-term growth trajectory. Looking forward, the company's ability to integrate AI into its ecosystem and anticipate market trends will be key to its future success, said Pernes. Some say that Google's culture has lost its dynamism, and they may not have the DNA to make large-scale shifts in strategy. This remains to be seen. YouTube TV is another unit that could help bolster Google's numbers. Last month, they reported a total of 8 million subscribers, which is up from 5 million in 2022. This growth could be attributed to the company purchasing the rights to the National Football League's NFL Sunday Ticket. The integration of AI into Google's ecosystem and its ability to anticipate market trends will undoubtedly play a crucial role in its future success, as noted by Pernis. However, there are concerns that Google's culture may have lost some of its dynamism, potentially hindering its ability to make significant strategic shifts. Whether Google can overcome this remains to be seen. Furthermore, YouTube TV presents another avenue for bolstering Google's numbers. The recent increase in subscribers, particularly attributed to securing rights such as the NFL Sunday Ticket, demonstrates the potential for growth in this segment. This expansion into live sports content could further diversify Google's revenue streams and strengthen its position in the streaming market. The most significant variable that could sneak up on Google's stock price in the coming years is its ongoing legal battles and how they may play out. They recently came up short against Fortnite maker Epic Games, which means Google's App Store may soon be open to competition. Many legal analysts expect the case to be heard by the Supreme Court before a final judgment is made. The ongoing legal battles faced by Google pose a significant variable that could impact its stock price in the coming years. The recent setback against Epic Games, particularly regarding Google's App Store practices, highlights the potential for increased competition and regulatory scrutiny in this space. The possibility of the case reaching the Supreme Court adds further uncertainty to the outcome. Depending on how these legal battles unfold, they could have profound implications for Google's business practices, market position, and ultimately, its stock price. Investors will likely closely monitor developments in these legal proceedings as they could shape Google's future trajectory. Beyond product development, one of Google's most important future assets is its cash. By the end of 2023, Google had over $111 billion in cash and cash equivalents on its books, with only $13 billion in long-term debt. While Google's past decade has been marked by growth, its next decade will hinge on adaptation and innovation in an increasingly AI-driven digital world, says Pernis. The trajectory of Google, now Alphabet Incorporated, over the past decade has been nothing short of remarkable, with an investment growing from $1,000 to $5,290. The journey underscores the tech giant's stronghold on digital advertising and its innovative forays into new markets. Yet, as we cast our eyes toward the future, it's clear that the landscape is shifting. The rise of ad-driven platforms like ChatGPT heralds a new era of competition, one that challenges Google's traditional search model with conversational AI experiences. Despite these challenges, Google's diverse expansion into cloud computing, cybersecurity, wearables, and smart home products reveals a company unafraid to explore and innovate. The tech behemoth's revenue streams, although still heavily reliant on ad sales, are becoming more varied. This diversification is a testament to Google's resilience and adaptability in the face of changing market dynamics. Recent controversies and legal battles have put Google under scrutiny, yet these hurdles also present opportunities for growth and evolution. The company's investment in AI and cloud computing, alongside strategic acquisitions like the NFL Sunday Ticket for YouTube TV, signal a forward-thinking approach. Google's substantial cash reserves, with over $111 billion in cash and equivalents, offer a robust foundation for future ventures and innovations. As we look ahead, Google's success will hinge on its ability to stay ahead of technological trends, adapt to an evolving digital landscape, and navigate the legal and ethical implications of its endeavors. The company's rich history of innovation suggests it is well equipped to meet these challenges. For investors, the future of Google promises a fascinating journey of growth, transformation, and potential, making it a compelling narrative in the annals of tech industry history.